You guys are billionaire. And you're like, hey, listen, sweetheart, how about we get a bigger house? Oh, no, we better not do that. We'll make ourselves happy. Let me ask you, Aaron, going from the house that you had, which is relatively big and luxurious compared to, the way that 2/3 of the world's population live, do you feel happier now at the concept of living in a caravan? Aren't you just jumping for joy, going, oh, this is amazing. I am so much more fulfilled. I mean, it's this sort of absolute bullshit which constantly gets told to us.
As far as the investment world is concerned, it's been a big week. Charlie Munga has passed away. Now, some of you might be thinking, who is Charlie Munga?
I had to ask.
I know. He's the guy that Lake Munger was named after, right?
So this story sounds a bit fishy.
Are you sure you haven't knocked someone up?
Charlie was Warren Buffett's right-hand man at Berkshire Hathaway. And it's really interesting. Of course, you get all the articles coming out as to what his investment style was. And I want to have a little bit of a look at that. But what's interesting before I go into that is he never had what they call a fancy mega house.
Right.
Now, he lived in the same house for 7 decades. And I've been looking at what his house would have cost at the time that he bought it. Round about, I think it was 1958. Now, he bought it in Omaha, Nebraska for $31,500 in 1958. Now, that was not the average house price around that time. To be fair, the average house price around that time in Nebraska was $5,918 in 1950, so 8 years before. Adjusted for inflation, that's around $67,177 in today's money. So you can see that he actually bought probably 5 times more than the actual average.
It wasn't a little love shack. I mean, look, put this in perspective. Graceland, okay?
Come on, Shaq, hang on, Shaq. Come on, just for the people watching at home.
I'm not doing it again.
Oh, coward.
Elvis's Graceland was purchased for $100,000. So let's put that in a little bit of perspective.
Back in the 50s. So that's what you've got to keep in mind. And okay, so he didn't have a mega mansion, as they say. Why? Well, they reckon that they just basically thought that people aren't as happy in really fancy houses. This is their claim. I don't know how true that would be, but that's what they said. So what they would observe is a lot of people doing that, and they quote, having a really fancy house that's good for entertaining 100 people at once. It's a very expensive thing to do, and it doesn't do that much good. Yes, you can hire a venue for a lot less than holding costs of having a big house and that sort of stuff. I think what you got to remember in this is that your house is not a asset per se. If you own money on it, the bank owns it, it's costing you to hold that. It's actually a liability to maintain it and the holding costs there. And I think a lot of people forget that. It's particularly in the real estate spills where, hey, this is your greatest asset. You're buying your home. You don't want to get this wrong.
It's spin.
It's actually your biggest liability in my view. Yes, it's backed by an asset that's real estate, which is generally always in demand. But just bear that in mind.
So next time, because obviously I'm home shopping right now, and I'm not even joking.
Not intentionally.
No, but so I'm literally, and this is not a joke. It looks like I'm going to end up in a caravan. Okay.
No, please don't.
That's my best option.
That's not what's going to be happening, Aaron. But anyway, we'll let you continue on air.
It appears to be my best option. Okay, but I'm just wondering if I can actually entertain 100 people in my caravan.
You're just wanting a broadcast, man. We know that. That's what you're doing as a tax write-off, right?
I would do anything for an edge bus.
People saw your dance. They loved your dance. I think we need to get a few hearts in the chats for Shaq's dance.
Exactly. So I just want to come back to this absolute bullshit drivel which comes from these leftist billionaires, right? Because Warren Buffett also still has his own house. Unlike Charlie Munga, though, he also has like a $30 million house in California. But this sort of rubbish, we should have an inheritance tax because, kids that grow up very wealthy that have it all handed to them, they always end up as screw-ups. And, you're doing me a favor by not allowing me to hand my money to my children. Rubbish, right? Imagine being married to Charlie Munga, right? You guys are billionaire. And you're like, hey, listen, sweetheart, how about we get a bigger house? Oh, no, better not do that. We'll make ourselves happy. Let me ask you, Aaron, going from the house that you had, which is relatively big and luxurious compared to, the way that 2/3 of the world's population live, do you feel happier now at the concept of living in a caravan? Aren't you just jumping for joy, going, oh, this is amazing. I am so much more fulfilled. I mean, it's this sort of absolute bullshit which constantly gets told to us.
It is insulting. It is.
You won't be able to jump in a caravan. First of all, you'll hit the roof. Secondly, when you hit the ground, you snap an axle. But,
maybe he can get a tall tent and go glamping. I'm sure he's still not going to be happier. Warren Buffett has given away 75% of the shares that he owns in Berkshire Hathaway and his net worth to charity. Now, I'm calling bullshit on that, but let's just say it's true. Imagine saying to your own children and your grandchildren, listen, I am one of the most successful people that ever live, and I'm not giving you shit. I'm giving it all the way to other people. Can you imagine what kind of depravity you'd have to have? Mm-hmm. Secondly, I'll just say, and I'm not going to go any further down this line, where exactly did that money go? Because it seems like it went into an awful lot of foundations that don't seem to give an awful lot of money away, off which some of those assets, I believe, can be backed out. And because they can be backed out, they can be borrowed against. But I'm not going to go any further down that path. I'm just going to say I call bullshit.
If you do want to learn about different options you have available just before you pass away and what to do with things, bluskyfactory.com.au has some great financial education courses. Yes, this is not a paid promotion. We're not getting paid for this shit, Derek. So come on, hurry up, pay us some money. Anyway,
I'll also add that Global Wealth Club with Warren, not Warren Buffett, but with Warren Black, can also assist you in addressing some of these issues, like the very modest and moderate and small tax increase the Labor Party promised that they wouldn't do on superannuation, where they doubled the tax from 15 to 30% over 3 million.
Okay. I would like to talk about some of the summaries that these guys looked at in terms of their investments. And Shaq, I'd also like you to weigh in on some of this, because some of it, what you've got to understand is Berkshire Hathaway have a typical accumulation style. Okay. All right. So not everybody's personalities are accumulators. And I think we need to recognize that up front. So what that means is they acquire, buy lots of shares, and hang on to them for a very long period of time. Traders, on the other hand, are in it for, there's the movement, bang, we're out, take our profit. And they see safety as in, hey, we got out and banked a profit, as opposed to hung in for a long time and ride the ups and downs of this asset. So with that in mind, some obviously editorials have come up about Charlie Munga's investment style. And one was this: the big money is not in the buying and selling, but in the waiting. What do you reckon about that one, Shaq? I'm going to throw these at you. Quick response.
I wouldn't invest the way that Warren Buffett has, and no disrespect to the man and Charlie Munga. I think that what they've achieved has been fantastic. Just please, everybody, remember that what they started off as was an insurance company, so they needed assets that were going to have long-term value, where money could be tied up. They had long-term investing horizons. What their model has worked for them. They've turned Berkshire Hathaway into an incredibly valuable company, and good luck to them. But in my personal opinion, trying to buy all the books so that you can invest like them isn't necessarily going to work. And if you are like me and you're a little bit impatient, I don't want to be a billionaire in 30 years from now. I would rather make 50 million next week than make $1 billion in 30 years. So, not that I've ever made anything in that range, but just as an example.
And at this point, I probably should throw in the disclaimer: this is not financial advice, general or specific. This is education purposes, what we're saying. I'll throw these other three out there. If you want to add to it, Shaq, you let me know. Buy wonderful businesses at fair prices. Great opportunities are rare. Good businesses are ethical businesses. The last one is very debatable.
I think both.
Is this groundbreaking news? Like,
no, but I think
I hear a lot of this when I'm trading, or people go, "Oh, back when I was a broker or a dealer, right? I used to be a futures dealer." People would say to me, "Oh, the stock market. Okay, yeah. All you got to do is buy low and sell high." Like, you think, like really? Of course, that's all you got to. What are you, some sort of genius? So this idea, buy good businesses at a fair price, really, as opposed to what? Buying a shit business at too high a price? I mean, of course. So
they're comparing it to a moderate business that may have a lot of explosion in prices. That's what they're comparing that to.
Sure, but you have to have a way of assessing what is a good business and what is going to be a fair price. And I would say that most people don't know how to do that, especially in the various industries that Warren Buffett and Charlie Munga invested in. So, they talk about having a great management and blah, blah, blah. Okay, that's all fine, but you're talking about billions and billions of dollars, like when they bought out the majority shares in Coca-Cola. If you're talking about the everyday family sitting at home, mum and dad going, look, we've got an extra 50 grand. What should we invest that in? They're either going to look at the stock market or do what? Go to the local, corner store and say, oh, look, you guys make some great sandwiches. I'll buy 50 grand. It's good management and strong revenue. This sort of advice is just rubbish and useless to the majority of people that are trying to get ahead.
And let me add this too, is most mum and dads will not understand the derivatives products that you can use to hedge your risk when doing this kind of stuff. Okay. So there is things that are options, stock options, and this sort of stuff that can hedge risk, which acts like metaphorically, like insurance. Okay. Most people don't know you can metaphorically insure share positions.
Sure.
This is powerful when you begin to understand this, and to put it in this kind of journalistic scenario without understanding these kind of backgrounds, it's just literature.
It is,
and that's what we've got to go by. So yeah, we teach this stuff at blueskyfactory.com.au. If you want to find out more, I'm happy to give you 15 minutes of my time to go through it and talk further. But I think you've got to take this with a grain of salt when you read this stuff, guys. And Shaq's very, very right in terms of buying a lot of these investment books. Be aware of that. All right.
Well, I mean, again, what's the point of teaching somebody something that, one, they can't do, and two, that may not necessarily fit with their investment? It'd be like somebody saying to me, look, I make a fortune importing cars from the United States, doing them up and selling them here. Shakeel, you should get into that business. Look, as profitable as it may be, I don't have a clue what I'm talking about.
Oh, but I do. Hang on.
You do. Right, but now I have to trust you and your expertise, right? And if I'm a mum and dad and I've got 50 grand to spend, do I want to spend it on that, or do I want to spend it on something that I have a little bit more expertise in? Yeah. And this is the problem that people need to understand, especially when it comes to their investment horizons. Everybody can be a guru, but for you personally, look at your own strengths, look at what you know, and don't be scared that everybody else knows more than you. Just stick to the things that you know and study that and trade that and get involved in that sort of stuff. We have, just to get back to government and bullshit regulations, when I was a late teenage, early 20s, there were a number of people that were selling options trading courses, one of whom, well, actually several of whom, made TV advertisements, the TV stuff late at night that they used to do. Now, one of the things that they talked about was renting out your shares. Now, ASIC, the regulator, has now said quite a long time ago that you are no longer able to promote options selling as renting out your shares. I understand where ASIC is coming from. I've never actually told clients that it's renting out your shares, but I understand why they were trying to teach it to people that way, because it was easier for people to understand. Sure. So the government comes in and says, you can't do that. Okay, well, how would you like it to be taught? But they don't have an alternative. So they tell you what you can't do, but they never give you an alternative. And as a result, I believe that people have found options trading and other derivatives to be really complicated and hard to understand, because people that try to teach them struggle to break it down in easy to understand bits so that people can get it. And Derek, I've seen some of Derek's courses. Derek does a fantastic job of breaking it down and making it easy to understand. If I tried teaching options trading, it'd be a disaster. But I think the government has a lot to answer for, because people should be empowered to create their own future and to build their own future and drive their own financial future themselves.
I'm going to give a little personal recommendation, because I've done one of the courses.
I've done both.
Yes, I know. I'm far more basic. And it will change your life. Simple as that. I'm not going to give financial advice. I'm just telling you right now, you will look at things very, very differently. Even forgetting about the financial side, just literally, it's just a great way of grabbing life by the proverbial. Thoroughly agree.
Thank you, John.
I'll recommend it.
And please do not try to get in contact with me. And all hate mail also directed at edradioaustralia.com if you're not happy with me.
Okay, so one other thing I do want to put in there, just something, again, legal disclaimer, go. It's not legal advice, blah, blah, blah. Sorry, Derek does a legal disclaimer so much better than me. When Shaq said if you've been working hard, you got a spare $50,000 in the bank account, I hear of so many people just jumping in, I went and brought Qantas shares, or I brought this share, I've done this, and they have absolutely no idea what they're doing. And then the next thing you know, they've lost everything. So please, 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 please take the time, get some basic financial understanding and under your belt. The education systems just do not teach it anymore.
No.
So please invest in yourself before you start investing in any of the markets, because if you don't know the basics, you are going to get screwed over big time.
Let me just say this.
Just for a disclaimer.
There's three skill sets here in terms of finance. It's one, making the money.
Mm-hmm.
Number two is keeping the money.
Yes.
And number three is investing the money. Mm-hmm. Each of those are three different hats to wear, and they require three different skill sets. And so we've got to keep that in mind, that I've seen great entrepreneurs who can know how to make the money, but they're terrible at keeping the money.
Well, seeing all my hats were burnt.
Can I just jump in with that disclaimer?
that one.
If I can just jump in on that disclaimer, because I did make mention that I was a future tiller once before. I'm no longer a licensed person in the finance industry in any way, shape, or form. So please, even if you think that, he must know everything because he used to be, everything that I've said now, don't even treat it as informational. Just treat it as entertainment purposes. I highly recommend that you do go and seek professional advice for any of these things that we've discussed. And I think the last point that I will make is, don't think that anybody is a guru. You are ultimately responsible for anything that happens. It doesn't matter how highly qualified the person is whose book you've read or advice you've followed. You need to educate yourself, and you need to make sure that you are in charge of your future. So whether you like what I say or hate what I say, it doesn't matter. Point being, I'm just being entertaining. I'm just dribbling crap. Your future is in your hands, not mine. So go and seek the appropriate advice.